to TheoTrade. This is Don Kaufman. It's November 13th, 2019, and you are watching the TheoTrade evening video. We are just minutes after the cash close to see the S&Ps massively unchanged on the trading session. You'll also see I'm taking a quick glance right now over at Cisco, which just released their earnings. It's a swing and a miss. You know, I often point out after the earnings over here. But listen, you know, Cisco, it did precisely what it was supposed to do. And that is, look, okay, freeze the screen right there. And I want you to see the expected move is about $2.40. And here we are in the after hours. Obviously, nothing's really settled out just yet. But the irony of that, the underlying move from 48.46 down to roughly 46, which is approximately $2.40. Spot on a move to the downside inside of Cisco in the after hours. There's a few underlyings also, earnings in the morning on none other than Walmart. But neither here nor there. Back to the broader S&Ps. Listen, with a marketplace that's massively unchanged, let's not read into it too much. We did about 1.2 million contracts in today's trading session. Kind of feels like we're starting to amp up for some positioning. As I've mentioned kind of day in and day out, people, you got to watch the bonds. The bonds, this is the dynamic that's really shifting the S&Ps. You can actually see that the bonds uptick today specifically. And the moment that those bonds uptick, this is precisely the dynamic that I was talking about in Monday night's video. The second that these bonds had any uptick whatsoever, what did it do? It took down, of course, none other than the financials. The financials closing down 0.7% inside of trade today. This is going to be important in the days to come. I mean, listen, that's what's really kind of levitating the entire S&P 500. And I say that specifically what's holding up the S&Ps. There's no question right now. It is all, people, all about those financials. You know, you'll point out it's Microsoft, it's Apple. All right, and we're going to talk about Apple here momentarily. Netflix is off big on the trading session. Amazon also off relatively big. Keep your eye on that in the days to come. Amazon off by almost $25, 1.4%. Nevertheless, okay, what really resonates with us isn't technology. It's all about the financials. The financials, they brought us, okay, to new levels inside of the S&Ps, and that's what's going to continue to sustain this marketplace. One other aspect that begs to be discussed in this session has everything to do with the volatility, okay, of the overall market, or shall I say lack thereof. You know, before I dive in and dissect Apple to some degree, I think it's imperative to discuss a little bit about the SPX, because you look at the just the last couple of trading sessions inside of the SPX, and people, okay, talk about massively unchanged. We are waffling inside an extraordinarily tight range, okay, to the downside, to the upside. I would look, okay, for some movement. Right on cue there, we just added our expected moves. And when I say I would look for some movement, what I want to get to is that the week at large, this central line right there, that's where the week started. We're effectively, okay, we've done nothing right now. Almost week over week, we've done nothing. But this entire week, we've done nothing. And we have plenty of, okay, movement available for Thursday and Friday. This particular week, I'm going to take a shot and handicap it to the downside. Look for a move down to about the 30.63 if we're to stay inside the expected move. Now, let's cruise over to none other than Apple. Apple, okay? Now, if this is not really on your radar screen, you're missing it, okay? You know, I've talked pretty much ad nauseum on TheoTrade on a day-to-day basis about Apple, and I continue to hear arguments about the fundamental side of Apple. I've heard arguments about the technical side of Apple, that this, you know, is a big, just a fundamental squeeze. I'm going to push all of that aside for just a second. I don't care so much technically. Let me guess. Technically speaking, I'm going to have to go ahead and say that Apple is, well, here you go. There's the RSI Laguerre. It's overbought. Newsflash, it's been overbought, okay? And we're like flatlining here. We're so overbought. The fractal energy is now run out, okay? That's not really going to help me. clearly, okay, we're in nosebleed territory over here. Now you can make the fundamental argument, all right, that everything is just chugging along their way. I'm also not going to buy that one in the near term. What I want to mention, okay, is statistical significance of the latest move. Now, in the latest move, we could talk about a move from right back here, which actually began in early August. That move, let's throw a number to it, okay? The move starting right here probably started right around the number of about 194, and is currently residing somewhere around 264. Do some quick math over there. What do you got? I mean, you're looking right now in excess, okay, of a $70 move inside of Apple in what? You've got August, September, October. I'm not even going to count November. Yeah, we're almost halfway through November, okay? But you can throw it in there if you really, really want to. Again, you're looking net at about 100 days of trade. Let's throw it down, okay? Maybe 100 days of trade cumulative have actually occurred in here. And quite frankly, that's really 100, all right, actual days, not necessarily per se trading days. If we were to look on an option chain, because, I define what's going on in Apple right now is almost like statistical insanity, but let's put some numbers to that. I mean, is it really completely and totally insane right now from a statistical point of view? Well, as I said, I'm going to try to put some numbers to that. I can actually look out at a February expiration just to get a feel for it, because February is what? It's exactly 100 days out. And as I assumed by looking at the chart, I mean, listen, in terms of actual days, you can define trading days and calendar days, okay? But net, I think the easiest thing to do, okay, is just to define what? Okay, total number of days in here, which is calendar days. It's about 100 calendar days. This is about 100 calendar days as well. Okay, in 100 calendar days, what does the options market, okay, depict the capability of movement for something like Apple? Okay, well, a great way to do that is to go out, literally to go out, 100 days out. Now, this, of course, is going to include another earnings announcement. Nevertheless, okay, even including the earnings announcement, you're looking at about a $28 move. Now, clearly, we've moved much more than, $28. How many times more? Okay, over 2 times more. And when you start looking at this from a statistical point of view, I'm just going to throw this one out for you guys. If you start looking at this from a statistical point of view, all right, here's Apple, and Apple, okay, its expectation of movement, we'll call it expected move, is supposed to be plus or minus, in this case, about $28 over a 100-day window. In this particular case, it didn't move that. It's actually up here, kind of in the nosebleed section. Let's just call it plus 70. So we've had about a $70 move, all right, in that 100-day window. So where are we in terms of standard deviation? Well, if one deviation move, okay, would be what? About $28 higher. Then you're out there, 2 deviation moves is somewhere, I don't even care if you want to call it 60. I'm just rounding over here so you guys get the gist of this. $60 move. We're at a $70 move. We're somewhere, okay, about 2.5 sigmas out, which is about 2.5 standard deviations, which doesn't necessarily, okay, define insanity, right? Apple trading at statistically insane levels. That doesn't necessarily define insanity, but there's an extraordinarily low probability that we'd ever get this far this fast. Now, okay, I'm going to actually top that one off. That's a move that occurred in 100-day, all right? Now, let's actually look at the move that's occurred much more recently, just from the low to the high. You're looking at a move here that started, let's be realistic, okay? You would never catch this move all the way at the bottom. Let's say 240 all the way up to 264. Now you're looking at what? A $24 move in 1, 2, 3, 4, 5, 6, 7, 8, 9. That's 10. That's 10 actual trading days. So this is a period that's basically 2 trading weeks, okay? Yeah, I'm comparing it to calendar days, but let's get crazy over here. Let's go even 16 days out. 16 days out, again, the expected move is about $9.50. Did we have a $9.50 expected move over here? No. you're actually looking again at what? $24 move. So once again, if you actually broke this down into a standard deviation, right? What are you effectively seeing when you're expecting plus or minus, for instance, a $9 move, and all of a sudden you've got this $24, $25 move over there? Once again, you're starting to get to the cusp of between 2.5 and 3 standard deviations, right? Okay, in line with what we saw previously. The point that I'm making, okay, with Apple is, yes, we are hitting statistical significance in this particular case, okay? And we like to build trades based on this logic. What logic is that? You have now seen, right, statistically significant moves where we believe that the risk reward can become extraordinarily viable. If you look at a standard deviation curve, right, out here, right, is one standard deviation. Now, one standard deviation is supposed to be about 68% of all of occurrences, right? Then you go to 2 deviations, and 2 deviations is about 95% of all occurrences. And we're somewhere out between 2 and 3 standard deviations, and 3 standard deviations would be 99% of all occurrences. Let's just round it, okay? And we're somewhere in between here. We believe at this point in time that we get a statistical edge. And what's the statistical edge? Can Apple continue to run higher? The answer is absolutely unequivocally yes. But we believe because of this statistically significant run that the risk reward starts to have degrees of viability. That is, okay, that the upside potential is rather diminished versus the downside capability, given the fact that we're already, okay, somewhere near, 99% of all occurrences covered in this latest move up. This is the kind of thing that you want to think about from a logical standpoint, okay, in getting into a ton of different trades, but specifically here in Apple, kind of defining and almost redefining what we would call, well, Apple trading at statistically insane levels. Much more to come on this front, and we're going to set up a couple of Apple trades right here live in TheoTrade in the days to come. Stay tuned, and thanks everybody for joining us here for the TheoTrade evening video.